Okay, let's dive right into this. Welcome to today's Explainer. We are unpacking what is easily one of the most fascinating and frankly volatile stories in the entire market right now. We're talking about Micron Technology, a massive player in the semiconductor space, and we're calling this the $1,000 AI gamble. The stakes here are incredibly high, and the recent price action, well, it's been giving investors absolute whiplash.
I mean, think about it. Just a few weeks ago, Micron was sitting squarely in the penalty box. The stock had suffered a brutal 35% crash, plummeting all the way down from its all-time high of $1,255. It actually broke below the massive psychological barrier of $1,000, and the panic among investors was very real. But then, it clawed its way back. So, the central mystery we're unraveling today is simply this. Is what we're seeing just a dead cat bounce before another brutal crash, or is this the start of a massive rebound to brand new highs?
To figure that out, we've got a clear roadmap for you today. We're going to cover the comeback kid, firing on all cylinders, the geopolitical tailwind, the great debate, key technical levels, and finally, the final verdict. All right, let's jump to Chapter 1, the comeback kid, a tale of two trends. You know, when a high-flying tech stock breaks a major psychological level, like that $1,000 mark, the fear in the market gets intense. Sentiment can shift from extreme greed to sheer terror practically overnight. Tracing the actual timeline of this roller coaster perfectly captures that crazy shift in sentiment. First up, we had that euphoric all-time high of $1,255. Everyone was thrilled, right? But then the bottom just completely fell out. We saw a crushing 35% drop, plunging the price well below $1,000. But wait, over the course of just a week, Micron posted 5 straight days of gains, aggressively crossing right back over that $1,000 threshold. And now, literally every trader watching this recent win streak is asking the exact same thing. Is the momentum truly back, or is this just a massive trap?
To answer that, we have to look at the raw data. So, let's move to Section 2, Firing on All Cylinders, the Financials. We are about to cover some financial metrics that are, well, they're frankly staggering. If you just isolate their income statement, Micron is operating as an absolute monster right now.
Seriously, $41.5 billion. In fiscal Q3 of 2026, Micron reported this massive revenue figure. It was an absolute monster of a quarter. In a market where companies are fighting tooth and nail for single-digit percentage gains, seeing this kind of top-line revenue is just breathtaking.
But the context of that revenue, that is even wilder. That $41.5 billion represents a 346% increase year over year. 346. We aren't just talking about a healthy uptick in sales here. We are looking at a parabolic, hockey stick growth curve that is completely redefining this company's entire financial profile. And if you want the ultimate shock factor data point, get a load of this. Over the last 12 months, Micron generated over $50 billion in net income. That's more profit than the company made in the previous 9 years combined. Just let that sink in for a second. More than the last 9 years combined. Management has even guided for Q4 revenue to hit roughly $50 billion. Numbers like these entirely cement Micron as the undisputed memory king of the current era.
So what is driving this absolute explosion in growth? Well, the engine behind this massive shift is artificial intelligence. The data center business now utterly dominates their revenue stream, making up a massive 60% of total revenue, while all the other business lines make up the remaining 40%. AI has entirely transformed what this company actually does, and crucially, who they sell to.
And this brilliantly illustrates why they have such wild pricing power right now. It all comes down to HBM, or high bandwidth memory. With razor-thin supply, which, let's be honest, makes it harder to get right now than Taylor Swift tickets, Micron sells this premium product directly to tech giants like NVIDIA and AMD for their AI accelerators. This is absolutely crucial to understand. HBM is not the cheap commodity memory chip of the past. It gives Micron unprecedented leverage, pulling them totally out of the traditional commodity race and dropping them right into the center of the AI gold rush.
But there is another layer to this whole story that goes way beyond just great earnings. Let's look at Section 3, the geopolitical tailwind, America First. We are seeing politics actively reshaping the semiconductor market, specifically regarding actions from the Trump administration pressuring Apple to avoid a Chinese competitor known as CXMT.
Setting politics totally aside and strictly focusing on market mechanics here, this creates a massive structural shift. By pressuring Apple to avoid CXMT, the US government is effectively funneling Apple's massive domestic demand directly toward US players like Micron. Second, this protects Micron's pricing power in the open market by boxing out foreign competition. And third, it cements Micron not just as a tech company, but as a strategic asset for national security. This creates a powerful dual tailwind that aggressively favors Micron, and it really acts as a buffer even if overall consumer demand for memory starts to soften. Now, what is really interesting here is the tension this creates in the market. This brings us to Section 4, the great debate, cyclical versus structural. This split in market sentiment is the absolute crux of this entire explainer, so you'll definitely want to pay close attention. We essentially have two totally different ways of looking at this stock right now. Let's look at the bear case first. The bears argue that this is just a cycle. They view Micron as a commodity chip maker, and historically, commodity chips face brutal crashes 6 to 12 months after their profit margins peak. Bears point to that 23% drop we saw in June as proof that smart money is already taking profits. They also highlight that a popular intrinsic value estimate, the GF value, suggests the stock is 140% overvalued, warning that a low forward PE of 9x isn't a bargain at all. It's a massive red flag. But then, on the flip side, you have the bull case. The bulls argue for a structural shift. They see Micron as a high-growth AI enabler riding a massive secular trend. They point to projections of $640 billion in free cash flow through 2030. I mean, that amount of cash could theoretically allow Micron to buy back 10% of their own stock every single year. So the tension here is immense. If the cyclical boom and bust is alive, the stock is a very dangerous value trap. But if this structural AI shift is real, it's incredibly cheap. And to validate that bullish perspective, we can just look at what the biggest players in AI are saying. Elon Musk recently stated, "Memory is the new bottleneck for agentic AI." As artificial intelligence models get smarter and way more complex, they don't just need fast processors. They demand vastly more memory to even function. The structural shift argument really hinges on the fact that AI is fundamentally altering the demand profile for memory permanently.
So how do we actually trade this? Let's transition from the macro debate into actionable micro data in Section 5, key technical levels, charting the path. Right now, the 50-day moving average, which is a key short-term trend indicator, is currently acting as a major brick wall.
Let's walk through this mental map. For a breakout scenario, the trigger level requires the stock to close above that heavy resistance zone of $1,050 to $1,080 with very strong volume. If it does that, the target is a retest of the all-time high at $1,255. And honestly, bulls, you have a recent golden cross on their side. That's where short-term momentum crosses above long-term trends to help support this. But in a breakdown scenario, if the stock fails at that resistance, the support targets are a retest of the recent lows near $800 or even dropping all the way down to $800. So if you are day trading this, you absolutely need to watch that $1,050 level like a hawk. Okay, let's bring all these threads together. What does this all actually mean for the focused investor trying to navigate this pivotal moment? Let's move to our final chapter, Section 6, the final verdict, actionable takeaways. Here is the balanced summary of what we've learned today. First, fundamentally speaking, the business is in its best shape historically, boasting record profits and unprecedented geopolitical protection. However, second, that recent 23% peak drop proves that Wall Street remains highly skeptical about how sustainable this run really is. Third, if you're a long-term bull, you absolutely have a clear path to that $1,500 average analyst target, provided AI actually continues to drive this massive revenue growth. But finally, and maybe most importantly, a strict stop loss is mandatory. Momentum might favor the bulls right now, but in the memory business, the cycles are long and the crashes, they are incredibly swift and brutal. Which leaves us with the ultimate question. Is Micron headed straight to $1,500 on the back of the AI revolution, or is the historical cycle finally turning against them? I really want to invite you to share your thoughts on this, because it is easily one of the most fascinating debates in the market today. Thank you so much for joining me for this explainer. Keep learning, keep focusing on the data, and I'll catch you in the next one.